You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everyone. Welcome to the Infinite Banking Mastery Podcast. Thank you for being here. Thank you for listening in. Thank you for sharing the podcast. And thanks for reaching out. I've gotten to talk to some of you, and I've had a lot of fun chatting with some of you. So today I wanted to talk about what happens if I don't pay my loan back. Well, you really don't want to never pay it back. That's not going to be in your best interest. If you just keep funding it just to only swipe all the money out every single time and only fund the policy and never pay it back, that's not going to be great. That's not the point of infinite banking. That's not going to be a helpful thing to do. You could end up lapsing your own policy if you are only always taking and never paying anything back. It's a possibility. And if you were to lapse it and have earnings, you would owe tax all of a sudden on all of those earnings. So you certainly don't want to cannibalize your own policy. Don't do that. And I will say again, life insurance policy loans are really the best possible loans you could ever have. You can choose everything about it, how you're going to pay it back. You can choose how much you want to pay towards it, what your payment is, how long you want to take to pay it back. You can choose if you need to take a few months off, something happens, maybe you're out of work for a period of time. You can shut off your loan repayment for that period of time. You can pay it all the way off with no penalty whenever you want. You can pay interest only for as long as you want for the rest of your life if you wanted to. Now, even though I just mentioned, of course, you don't want to never pay your loan back, if you were to take a loan and then not pay it back for, say, a couple of years, not pay anything towards it, it will get added on to your total loan balance. So the interest, I'm talking about the interest will get added on to your loan balance each year because the life insurance company will only send you an interest statement once a year, your anniversary. So you either have the option of paying that interest or you can allow it to tack on to your total loan balance. The life insurance company is not going to hassle you, come after you, charge you any kind of penalties or anything. If you choose not to pay the interest that they are charging you, they'll simply send you a statement once a year and it's up to you. You can pay that interest at that time, or you can have it tacked onto the principal balance of your existing loan. If you've already been making a monthly payment or payments throughout the year, you may say, well, I've already accounted for that interest. I've already made payments back. So I can just ignore this interest statement. One really cool thing about life insurance loans is that when you do make a loan repayment, it goes 100% to the principal. No other debt out there or loan takes your payments and applies them 100% to principal, which is again why life insurance loans are the best. There's just so many reasons. So you make a payment to say you have a $10,000 loan, you make a $500 payment to that loan. Next month, you owe $9,500. You make another $500 payment, and then month 2, you owe $9,000. So it takes your principal down by the full payment that you are making, which makes the interest that they're charging on this loan shrink throughout the year because they're not charging you interest on the full amount of loan that you took all year long. They're charging you interest on a shrinking balance. So if you had a 4% interest rate on a $10,000 loan, by the end of the year, that interest would be $400. But if you're paying $500 a month down on this principal, so that each month they're charging you interest on a balance that's shrinking, $9,500, $9,000, $8,500, by the end of the year, you will have accumulated less interest than the $400 on the $10,000 loan than you would have if you would have just paid nothing. So if you pay nothing on the loan, then by the end of the year, you'll owe $400 of interest, and it will be up to you if you want to pay that interest to the company, pay it off, pay it to them, or if you want them to tack that $400 to the bottom of your loan. So now you're going to owe $10,400 if you've paid nothing and just have the interest tack on. But you do have that option. And it's pretty amazing that they will take that loan repayment and apply it 100% to principal, because that will eliminate your loan in the fastest way possible. It is the most efficient type of loan that you could possibly have. So sometimes people will want to take over other debts and bring them into their banking system instead of paying these outside banks or outside creditors. You can pay off that loan to that other bank or creditor, move it into your banking system, and now have a really efficient loan payoff process. For clients who want to do this, we do build a debt pay down spreadsheet. And so we would just ask them and get the information for what type of loans they have, what are the interest rates, how much are they paying on that, what's the minimum required payment, how much are they actually paying, because a lot of times people are paying more than what's required. So we'll gather all this information and then create a debt loan payoff like spreadsheet that we can help walk you through and help you understand, so you can see what's actually happening and how it works to use your life insurance loan to pay off your debt. People get excited about this. It's pretty cool. But of course, it's just an illustration to show you how it works, because certainly life happens, things get in the way. You might end up charging again on one of those credit cards. And so it's not going to be a perfect example of what would happen if you were to do exactly what we put on the spreadsheet. So it's not 100% perfect. It's just an illustration to show you how it would work and what it would look like, and approximate how long it would take you to pay off your debts using your banking system. And so oftentimes, as we're using these systems and making these spreadsheets to show people what they can do, it illustrates how you could move payments from credit cards that you're currently paying or other loans, student debt, mortgages, whatever it is that's a priority for you to pay off. This spreadsheet will illustrate how we are going to move those payments and cycle them back into your policy to be replenishing your policy for the loans that you're taking, and moving those payments that you're used to making to those other bills, credit cards, other loans, and just make the same payment or a different payment, because we can change it, back to your policy to replenish your funds and keep your cash flow, your outgoing cash flow, the same. So it doesn't feel like, oh my gosh, I have new payments. I have to pay the credit card company still. I have to pay the life insurance loan now. We can work it out and build this spreadsheet and show you how you could keep your cash flow the same and still be taking over these payments and moving them over to your banking system. Sometimes it's just really simple. We just have a few things. It's simple as move that credit card payment that you're used to making from your credit card over to your banking system. So you're still making the same payment, but it's being more efficient for you. You're paying off your debt more efficiently. You've paid it off to that credit card company that improves your credit score. It's all positive stuff. Paying off your debt, increasing your score, all these things, getting your debt paid off more efficiently, all positive. It's all going in the right direction. One thing to keep in mind is that if you're taking out loans and it kind of gets out of hand, maybe, or you're not quite banking like you're supposed to, and maybe your loans are getting large inside of your life insurance policy, and now you're having a hard time keeping up with paying interest only at the very least, and maybe you're even racking up debt again outside of your policy. There is a way to eliminate that loan inside of your policy, because it is backed by your own cash. So it's kind of a last resort move, but there is still a possibility of helping you get out of that jam. And so you shouldn't be stressed really if you have a loan inside of your life insurance policy. Don't feel like there's no way out. I'm going to be stuck and I don't know how I'm going to pay this. There is a way out. We can help you to eliminate that loan internally. And it's not necessarily in your best interest. I mean, it maybe in that moment for what's going on, it could be, but it's going to be best for your policy, of course, not to have to do something like that. But it is a possibility, just to let you know. And ultimately, when you're taking these loans out and you're using your money, paying it back, and then maybe it's retirement now, you've replenished most of your funds, you're using them again, flowing them in and out, using them for retirement, you'll end up amassing some sort of loan inside your policy in your retirement years, and then it will just come out of your death benefit. So when you pass away, your loans that you owe and any interest owed will be paid from your death benefit before the remainder goes to your family. So the death benefit will be reduced by the amount of the loan and the interest that is owed to the company, but then it will get paid off. And so your family can be at peace knowing that your loan that you're creating inside of your policy, that it's going to go away when you pass away. Maybe your surviving spouse, it might be a concern, but it's not a concern because it will be taken care of at death, and there will be still a remaining death benefit to go to your family or your loved ones, your spouse or your children, or a charity that you care about. Well, I hope that this clears this up for some of you who have this question or just wondering how this works. What happens if you don't pay your loans back? It's always a good idea to pay your loans back, very important, and you should be recycling that money in and out of your policy. And certainly while you're building up to your retirement years, yes, you do want to be paying your loans back so that you're not in shock when you get to retirement and wonder, where are all your funds for retirement? You don't want to just only deplete them out and then not replace them. You should just be taking over your debts, paying them back like you would any other credit card company or loan or bank, and be replenishing your funds so that they're there again for your use. But in a really worst case scenario, it is possible to eliminate some or all of your loan, and also it will eventually come out of your death benefit. Now, I do just want to be clear about something. This whole time I've been talking about how you don't want to amass a large loan and then never pay it back, that you want to be replenishing those loan funds. I am talking about those years when you are building your system. During your working years, when you're borrowing out funds for things you want, need, or would like to invest in, when you're pulling out those funds during your working years, that's the time frame when we're expecting you to be paying it back. Once you're in your retirement years and you are needing money for income, now we have a whole nother structure and process for taking money from the policy, and then we don't expect you to have to pay that money back. So I'm talking about the time period, your working years, not your retirement years. At that time in your retirement, no. Then we have a whole nother plan for simply taking money out of the policy. So I hope that this was helpful. If infinite banking is something you've been learning about for a while now and you're ready to move forward and look to how it could work for you and your family, look into how a policy could be structured for you and how a banking system could be built for you and your family. And if you think you'd like to work together, please reach out. I would love to meet you. I would love to connect with you. I would love to learn how I could help you. You could reach me at Valerie@alphaomegawealth.com. Again, I hope that this was helpful. I hope you have a great week, and I'll talk to you next time. Take care.
This is thepodcastfactory.com.